We remain committed to our PVT investment philosophy and process. Indeed, it is at times like this, when uncertainty is heightened, that a robust and systematic investment philosophy and process is most important. However, it is clear that the economic background has changed profoundly over the last few months, and as a result, we have wanted to review the PVT investment case for each of our holdings. I think all businesses have been impacted by the pandemic, but ours less than most. We transitioned to working from home well before the lockdown, and the business has been able to function normally since. Across River and Mercantile, we have a very well diversified business and asset mix, so equity market falls have been largely offset by strength elsewhere. It has been a difficult last 2 years for our investment style: value, buying companies when they are lowly valued, and recovery, buying strong business franchises when profits are temporarily depressed. And this difficult phase for our approach has continued through the coronavirus crisis. As during this period of uncertainty, other investors have sought the perceived safety of mega-cap growth and quality-type stocks. However, this period of value and recovery underperformance has created some of the best PVT stock picking opportunities I have seen in my career. Our activity has been relatively modest and focused on the holdings most impacted by the lockdown measures. Our main sale being a full exit from Carnival Group, Carnival the leading global cruise ship operator, given the material impact the pandemic has had on its operations and also on its financial strength, its financial stability. We have purchased Booking, the online travel and a hotel booking platform, and also Walt Disney, both leading global franchises that have been impacted in the short term by the pandemic, but this providing an opportunity to purchase their shares on really very attractive valuations. We try not to predict the short-term outlook, but clearly there remains significant uncertainty regarding how long it will take for the global economy to return to a new normal, and this uncertainty will continue to mean volatile equity markets. However, most countries around the world are now emerging from lockdown. Economic activity will, as a result, already be starting to recover, and this, combined with significant monetary and fiscal stimulus, should provide a supportive background for equity markets in general, and in particular our value and recovery type stocks. The valuation of the portfolio that we run for Alliance Trust is very compelling. The price to book value is just over 1 times, the earnings yield is 11%, the cash flow yield is almost 20%. Such a low starting valuation for a portfolio of market-leading businesses such as Siemens, Baidu, Walt Disney, Prada, Citigroup, Roche, Lloyds suggests that when some certainty returns to the global economy, it would be right for me to believe that the whole portfolio should do very well indeed. We are high conviction regarding the banks held in the portfolio, that's Lloyds and Citigroup, and they had very strong balance sheets going into this crisis. But clearly their bad debts will rise during this period of higher unemployment and increased economic uncertainty, and we will need to watch this very closely.